Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, February 8th, 2024. I am Frank Ochoa, aka PivotBoss. Happy Thursday, everyone. Here's a look at the daily time frame of the ES. You'll notice the previous session we got through the 5,000 level, got as high as the 50-20s, and then started to pull back here in pre-market and overnight trading. The big level here to watch is going to be 5,000 and into the 49.95 level. Yesterday's midpoint 49.95, 5,000 the key level. And for bulls looking to defend the morning pullback, you're looking to defend somewhere between 95s and 5,000 for a check mark day higher. Can this market push higher through the 50-20s and continue this move to the upside, especially after breaking out of the double inside narrow 3-day range? The upside break here, especially from the low of the breakout bar, can take you somewhere between 50.70 and 5100 by the end of the week if we get a good enough extension here. But it all depends on the initial pullback and how well bulls can defend a retest of 5,000 from above. So any pullback into 5,000 and as low as 49.95 could offer a buying opportunity for a continuation to the upside. Overall, this market remains quite bullish, and we have lacked any sign of significant rejection. So again, any pullback could be a buying opportunity until proven otherwise. Taking a look here at the NQ, very similar price action here in the NQ, pulling back modestly from the previous session's highs and retesting the midpoint, or rather the just above the midpoint, and retesting right at the previous week's high price. All of that right there provides an opportunity for bulls to defend. That's right into the as low as the previous session's midpoint here. Previous session's mid is the 752 level, and into the previous week's high of 777. So somewhere between 50 and 75 could offer an opportunity as deep as that for bulls to defend and check mark move this thing higher, especially again after breaking out of this 3-day narrow range. The upside break could lead to a nice continuation that takes us as high as the 18.3 level. 18.3 above, 18.2 to 18.3 will be the upside target that could be in play over the next several days here if we can get this follow through and if bulls can defend the breakout point from above. Any failure at the 1750 level could lead to a move right back down within the narrow range. But again, even if we do pull back, even a big 1-day or 2-day pullback, bulls have been defending it for another rotation up. We just haven't seen much in the way of weakness that has led to lasting weakness, and instead bulls have been defending every turn possible. Taking a look here at crude oil, this one's up 1 1/3% at the moment, and has continued to see extension here. It finally got through the 74s here today. That was a big level, a check mark move happening after a pullback into the 73.66s, and now a check mark move higher that's quite bullish. We've seen some nice elongation ever since this rather weak rejection, but a rejection that was decent enough at the previous year's close price. Big level right there, and we're seeing this thing push back up. With the recovery of 74s, there could be an opportunity for this thing to continue higher toward the 76s up above and the 75.88 FOMC key level, which went offered immediately after its development there. So we could be snapping back to that level. Now 76 has been the top end of the range, and again, it tried to get through it, it tried to hold it, and failed back into the range. So this is going to be a big time level up there to test if it can get there over the next several days. So not a bad move here for crude oil, but still mostly stuck in the range. Through 76s can open up some more upside up ahead, and we got about another $1.12 before we get a test at that level. Gold futures right now down about 2/3%. Continues to show a bit of weakness here off of the 2080 level. 2080 rejected here, 2070 rejected, previous month's close rejected, and we're seeing this thing continue downward. But it's been a very slow down move, and that's been kind of the MO here overall for gold. It hasn't really moved very quickly in any one direction, and has stayed mostly in an 80-point range between 2000 and 2080. To fail at 2040 will open up this lower half of the range into 2000, and we could stay between 2000 and 2040 until proven otherwise. Lastly, looking at the YM overall continues to show compression of range with an upward bias. You see this range right here. That is a very narrow multi-day range, but not super compressed against the averages, but enough juice inside this range to go about 1,200 points on a breakout attempt. So we got 1, 2, 3, 4, 5, 6, 7, 8 days narrow, and now you can add the 9th here to it. But very narrow range at the moment, super compressed for the day. Just 100 points of range right now, which is about 30+% of ADR. If you look right here and bring this back down, you'll get a reading for it here. Actually 27% of average, 100 points of range, and it's been averaging about 366 on a 10 and 392 on a 5, as these are developing levels at the moment. But again, if we can get expansion out of this narrow 7, 8, 9 day range, there could be about 1,200 points of expansion up ahead, which means if we break through 38.8, we could be looking at 40,000 up ahead over the next 8 to 9 sessions if we can get a clean breakout. Any pullback into the bottom of the range could still be a buying opportunity for an attempt down the road. Again, this market remains extremely bullish right now until proven otherwise, with the potential here to find new highs into 40,000 down the road. A failure of the previous month's high here, and you're rotating back down again into the range below to kind of stave off a breakout attempt for a little while longer. So right now, very narrow price action here overall. Can we get enough juice to get a breakout here at some point sooner than later? We'll see. All right, that is it for now. Good luck, trade well, and I'll see you in the trading room. Take care.